Welcome back. You're watching Market Fatafat right here on ET Now show where we get you all the stocks buzzing based on news flow as well as on technicals. Talking about technicals, now we have Osho Krishan joining us on the show. A very good afternoon to you, Osho. Thank you so much for joining us on ET Now. And before you, we also had Kunal who was giving out the stocks that are buzzing on charts. He spoke about two cement players, one is Grasim and Ultratech. And now you're going to talk about ACC. It looks like the cement stocks are on fire.
We are getting all those targets and views on the cement space.
Exactly. Everything you want to know about cement space, this is the destination, isn't it, Osho?
Good afternoon. Thank you for having me on the show. Well, yes, cement sector has been on the buzzing from quite some time, but specifically why I have selected the cement sector because there has been a lot of buying attraction or buying traction that can be seen in the cement counters. So we should not miss out on the opportunities where we can see a good opportunity for our traders plus investor community. So that's a very positive thing that people are having very positive view in the cement counters.
Okay, positive view coming in on the cement counters. But let's move on and talk about Upala. This one too is in focus on the back of a bulk deal that we saw happening where Nippon India Mutual Fund has actually acquired 18.8 lakh shares in the company, which is a 1.7% stake. This is at a price of 399 rupees. Now, the seller of this was a Malabar India fund. So we are going to be keeping an eye out on this one. Post this, we're seeing Upala has been buzzing in trade after Nippon India has entered into the company with a 1.7% stake.
Alright, next let's put the spotlight on Bajaj Finster because Bajaj Finster today announced the launch of their mutual fund business. Ganesh Mohan is going to be the CEO of Bajaj Finserv AMC while Nimesh Chandan will be the CIO of the company. Bajaj Finserv MF has already filed for 7 products with SEBI and the company will start rolling out the products in the next 30 days. So on back of this new venture, you had Sanjeev Bajaj also who addressed the media in order to talk about the launch of their mutual fund business which will be India's 41st asset management company. The fund house will start rolling out products, like I mentioned, in the next 30 days. In a response to ET Now, Sanjeev Bajaj says that they are building a full financial services stack for the next 5 years. Listen in.
We believe we have a reasonably full stack for the next 5 years at least, and we may not have car and SA, but we have F&D, which takes care of the requirement reasonably well. But yes, you are talking about a bank license. For everything that we want to do in the lending space, the current NBFC license allows us to do that. And even with that, if you look at the total lending space in India, our market share is less than 2%. So we believe we have a huge opportunity there. Beyond that, neither is RBI clear on its bank licensing guidelines for business groups, and nor are we seeing any opportunity that we are missing in the short to medium term.
Okay, let's move on and Osho talk about L&T on the charts. How are you seeing this major move on from here on? Any up move that you're expecting?
Yes, L&T on the technical chart has seen some kind of consolidation for almost 10 to 12 trading sessions, but yesterday it has witnessed a breakout from the consolidation zone. Even on the technical perspective, the breakout has been seen just above the 21-day exponential moving average. So this is being a very positive development for L&T, and L&T as a counter has always outperformed the market or outperformed from the sector which it lies in. So from here onwards, one can expect L&T, there will be a gradual up move, but one can expect the bearish gap, which is approximately placed around 2350, 2360 zone. So that gap will be tested very soon. So one should be very much optimistic, and even from the risk reward ratio also, L&T is placed at a very decent levels. So one should definitely keep a radar or start accumulating this counter for the immediate upside target of 2360.
Start accumulating L&T is the word coming in from Osho, but let's talk about another cap good major, that is BHEL, and we're seeing opposite moves coming on BHEL today, Vamakshi.
Well, yes, Cheryl, the stock is down and out in trade today after a brokerage note that came in from Nomura. They've downgraded their rating on this stock from neutral to reduced. They've also trimmed their target price from 79 to around rupees 61 per share. Now, Nomura has highlighted that the operational cash flow for BHEL has in fact turned negative in FY23 with a substantial rise in the contract assets. The recent order wins also that have come the company's ways look quite aggressive, and that is actually limiting the scope of gross margin recovery. So given all these factors, they've actually gone ahead and cut their EBITDA estimates by almost 13% for FY24 and 4% for FY25, and they are factoring in delayed order inflow as well as still weak gross margins. They're also factoring a slower pace of cash generation as well. Now, as far as the thermal power is concerned, their tendering prospects do remain strong, but they're unsure of the EBITDA margin as well as the cash generation prospects for the thermal power segment. Now, the stock is currently trading at a higher end of almost, that is 16 times of its long-term EV to EBITDA, and as a result, the stock is trading at an expensive valuation. So overall, we have a thumbs down coming in from Nomura on BHEL, and that is the reason why the stock is down almost 2.5% in trade today.
Keeping an eye out on BHEL, Nomura downgrades the stock. But let's move on, Lisa, talk about JK Cement then. Why is this one in focus? What's the news flow here?
Well, like Cheryl said, all the cement stocks are on fire, and the latest coming in from JK Cement. Well, the share price has gained, and this is on the back of it, JK Cement acquiring 100% shareholding in Toshali Cement Private Limited. The total cost of acquisition for this is around 157 crore. Now, talking about Toshali Cement Private Limited, a bit about it. It was incorporated in 2002, and the company has 2 manufacturing units. So how will it help JK Cement? Well, this acquisition will help JK Cement propel its expansion, its footprint in the eastern region. And if we look at the stock price, the stock had touched around 3,288.9 on 30th May. It was at a 52-week high, and currently it's just a few distance away from the 52-week high, the current price. But on the recent rally, Jefferies had released a note recently, and they said that they had downgraded the stock to hold from buy, citing expensive valuations. So that's on JK Cement, which is in focus today.
All right, that's JK Cement for you. Osho, let's talk about Ashok Leyland. This is one of those CV players which made a roaring comeback when it comes to the stock price. Now, yesterday they announced that they are actually in a pilot program tie-up with BPCL for fuel testing. But on the charts, Ashok Leyland, do you think that it will replicate that rally once again?
See, in this financial year, we have seen a very magnificent rally in Ashok Leyland. From the lows of 134 odd zone, it has moved towards 155 levels. And if you will be seeing on the technical perspective, the stock has corrected, which is approximately 50% on the Fibonacci retracement. So from there onwards, we have seen a consolidation in this counter for, let's say, 6 to 7 trading sessions. And as you have mentioned yesterday, the consolidation has been broken out on the higher end. So that contributes to a very positive development for Ashok Leyland. So from here onwards, one can expect 155 to 156 levels on a very immediate basis. And once it surpasses those levels, then it will be having a very tremendous upside rally, which can be seen towards 180 zone also. So Ashok Leyland has the potential to give a very positive and very decent returns in terms of investment also and for trading also. So one should definitely keep their accumulation or this counter in their radar for trading or investment purpose.
Okay, let's keep it with the auto space, because Harsha Upadhya has an opinion coming in on the auto space as well. He's maintaining an overweight rating on the auto space. What is his thoughts on the ancillary space as well? Let's go across and listen in.
Auto was one sector which was kind of not making the list for quite some time. Over the last couple of quarters, I think the sector has seen a lot of positivity. More subsegments have seen broad-based momentum coming in terms of demand. We also expect gross margins to improve as commodity inflation moderates. The new product launches by a couple of players have also evinced a lot of good interest. So overall, this sector seems to be one sector which can continue to outperform. And along with that, we are also seeing good order books for most of the auto ancillary companies. And they should also be the beneficiaries of commodity price deflation as you go forward. So overall, auto ancillaries is definitely one space where we'll be positive and continue to have overweight at this point of time.
Okay, let's move on and talk about Capsight Infra. Why is this stock in focus today? The board will be meeting on 8th of June to consider a fundraising plan. This is an important plan which is coming in for the company, and on the back of this fundraising plan, we've already seen that the stock has seen a run-up coming in today as well. Fundraising will surely help the company in terms of expansion plans, if anything, that they have going forward as well. So on the back of this, we're keeping an eye out on Capsight Infra. As of now, the stock is trading with gains of almost 3.2% in trade share.
All right, moving on, let's talk about Krishna Industries. Osho, on the charts, how is this tire major looking like to you?
Industry has the similar kind of a pattern that we can see in Ashok Leyland. It has seen a very magnificent upside move from the levels of 1950 and it has went towards 2500. But from 2500 there has a significant downside or cool off or correction. We can say that there has been some kind of correction that this counter has witnessed from 2500 towards 2200 zone. But again, this counter is consolidating above the 21-day exponential moving average. So this also contributes to a very positive setup on the technical chart. So from here onwards, the time it surpasses the zone of 2320, to be very specific on the level 2320, from there onwards we can again expect a very strong upsurge in this counter for the immediate target of 2500 in a very short-term perspective.
All right, moving on then, let's talk about PB Fintech, and why is this one in focus in today's trading session is the fact that there was a block deal that took place on PB Fintech earlier in the day. The stock was, the block deal was of approximately 27 lakh shares. If you look at the stock price also, it's among the best performer among its peers in today's trading session. Also, let's not forget that the stock has actually declined by 4.8% in the past 52 weeks, underperforming the benchmark indices. However, today the stock is moving in trade on back of the block deal, and 3.5% is where the stock is perched at. We don't have the details of the buyer and the seller as of now. By evening we shall get that.
Okay, let's move on and talk about Nippon Asset Management on the charts then, Osho. Today the stock is buzzing in trade. Last 1 week, last 1 month, seems like it's finally gaining and picking up that traction, after the consolidation phase for almost a year or 2 years for this stock. Now, is this the time to actually start picking this one?
Technical perspective, this counter has seen a surpassing the 200-day SMA for the first time in last 6 months. So for past 6 months, the counter has been hovering below the 200-day SMA, but with today's strong traction, buying attraction in this counter, the stock has surpassed the 200-day SMA. So that's a first thing that is a very positive contributes on the technical chart. Second, the counter is in a formation or has given a breakout from a flag kind of a pattern. So from here onwards, as per the pattern breakout, we can expect 270 rupees target for this counter in a very short-term perspective. So obviously the counter has started gaining traction and it is on the verge of having a very strong rebound. So one should definitely keep this stock in their radar for the immediate upside target of 270.
All right, Vamakshi, why is Chalet Hotels in focus today?
Cheryl, the stock is in focus today after the company announced that they will be launching the Westin Hyderabad High-Tech City in partnership with Marriott International earlier today. Now, when we look at the company, it is in fact the second hotel that the company has launched in Hyderabad, and this is a 168-key property, and important to know that this will be managed and operated by an all-women team. So that is the news flow surrounding Chalet Hotels. The stock was trading in the green, but in tandem with the market, it has given up all those gains. As of now, it is trading lower by nearly 0.3%.
We're talking about a private bank name and Kotak Mahindra Bank. Osho, what are the charts indicating for this one? What is the run-up that you're expecting? What's the target price that we are keeping an eye out on for this one?
See, overall, as we compare Kotak Bank with other private sector banks, then it has not performed that well. But from here onwards, what we are witnessing on the technical chart that it is consolidating at a very strong base of 1900 odd levels. So from here onwards, the gain can be seen because even from the risk reward ratio, 1900 has acted as a very strong support. So from here onwards, one can expect a decent consolidation in this counter, and then we can see a run up towards the levels of 2100 in a very near term period. So one should definitely keep their radar on this one because this has not given very strong returns as compared to the peer companies.
Okay, let's shift focus then on to the pharma space. Indigo Remedies, Lisa, why is this one in focus today?
Well, yesterday, Indigo Remedies, they saw a decline, and this was because US FDA, they had issued 4 observations on its Goa facility. But today, the stock moved up, at least in the early morning session, and that was because it acquired around 85% stake in FPP Holding. Well, FPP Holding is the holding company of Florida Pharmaceutical Products. So this company is based in Florida, and it is engaged in the marketing and distribution of generic pharmaceutical products in the US. So this is it is a strategic investment by Indigo Remedies, and it serves as a significant milestone for the company because it will solidify the company's position in the US market and also increase the overall competitiveness and also the growth potential of the company. So that's on Indigo Remedies. It gained in the early morning trade, but since then it has cooled down in tandem with the overall market.
Okay, let's move on and talk about UPL then, Osho. What are the charts indicating for this one? Because we have seen a clear underperformance coming in for this one, just done nothing over the last 2 years as well. Now what should we be expecting from UPL? Still a correction, consolidation continuing, or maybe an up move is what the charts are indicating?
See, UPL is trading in a downward sloping channel. So from here onwards, on the downside, the support was placed near to 660 levels, which even coincides with the previous support zone. So that means it is having a very strong base near 660, 650 zone. And from there onwards, it can see a very decent rally, not a very magnificent rally because overall the trend is weak. But till the level 720, because on the channel pattern, the immediate support is 660 and on the higher end, 720, 730 is the immediate resistance. So until we breach above 730, there won't be any significant traction in this counter. But for short-term traders, the counter has rebounded from the strong support zone. So from here onwards, 720 to 730 can be seen on a very immediate basis, and again 730 will become the supply zone. If it surpasses the same level, then from there onwards we can expect 60 point of more rally in this counter.
Okay, let's move on and talk about Keystone Realtors. This one is in focus because we look at the stock up move also, 6% up move that we're seeing coming in. And we also spoke to the management today in terms of that. What they are saying is that the MRR continues to be a strong market house in the 1 to 7 crore segment. Other than that, they continue to drive the growth as well. Mahindra belt now are very well placed given the infra push, as well as seeing a lot of interest in Virar as well, areas as well. And Thane is also growing quite well in terms of market. So strong demand that they're seeing coming in terms of the premium category, as a category was not supplied to very well as well. So let's keep an eye out on Keystone Realtors as well. This is the key highlight that is coming in from the management. Stock up 6%.
All right, let's talk about JSW Steel then. Osho, how is this one looking on the charts to you? Do you think that this is a standard candidate when it comes to the metal space?
Overall, JSW Steel has been in a consolidation or kind of a sideways movement from quite some time, but looking at the overall technical setup, it is hovering just above the 200-day SMA. So that means it is having a very strong support of 200-day SMA on technical chart. And from here onwards, we have seen a strong consolidation, which was seen a breakout in yesterday's session. So we are expecting that from here onwards, a follow-up buying can be seen in this counter towards the level of 740. But again, 740 is a very strong supply zone. So from there onwards, we again might see some kind of correction. But if it breaches 740 zone, then from there onwards, we can see 800 on the chart for JSW.
All right, moving on. Then Vamakshi, delivery. Why is this one in focus today?
Cheryl, the stock is in focus after the company held an analyst day, and let's quickly glance across what the important takeaways were. The company said that they would be matching the prices of peers in express as well as PTL businesses, and they will not be looking to cut prices over the next 9 to 12 months. And even without cutting prices, the management sees room for them to gain market share. Captive players that are opening up their logistics for third parties are unlikely to be a threat for the company, is what they highlighted. Meesho, acting as an aggregator of logistics services, is more of a threat to other aggregators, is what they believe. They believe that the aggregators cannot be efficient than carriers. The management is quite positive on ONDC as it fundamentally shifts the intermediary from marketplace to logistic companies. Barriers to entry are low, but the barriers to scale are very high. They're expecting adjusted EBITDA margins for express parcel to be in high teens, nearly around 13 to 14%, and an ROCE of almost 30% plus. So those are some of the important takeaways that came in from delivery. The stock did see a spike, but ever since, in tandem with the market, it has declined up nearly 1/10%, as you can see.
Okay. So moving on to stock number 35, Deepak Nitrite on the charts. Osho, what is this one indicating for us today?
See, Deepak Nitrite has gained a strong movement from the past two weeks, because we have seen a magnificent move from the levels of 1950, which has given a very huge breakout in this counter. On technical chart, we are witnessing a flag kind of a pattern that has been formed in this counter. So from here onwards, again 150 to 180 point of movement can be seen in Deepak Nitrite. The first resistance or the first target that we can see is near to 2250, and once it surpasses from those levels, but that won't be a very drastic or very recent move. There will be a gradual move that is expected with this counter. But if it surpasses 2250, then again it can go towards 52 week side levels also.
All right, moving on. Lisa, Danuka is the stock that you're going to talk about. Why is this one in the spotlight?
Well, they have launched a new biological insecticide named Nematax in the domestic market, and with this, total 6 products have been launched in FY24. And just a few weeks ago, the company had launched around 5 new products, including 2 herbicides as well as 3 biologicals. So, Analyst says that with these product launches in the early Kharif season, the company will be able to market these products during the FY24 period. So, the biological launch will also take the company near its 3-year target of around 5% contribution from biologicals. So, well, as we can see, Danuka is trending higher on the back of this news flow.
Danuka in focus on the back of this news flow. Jacob, Osho, why have you picked up this one in terms of targets? What are we expecting here?
For Jacob has seen a very drastic correction in the recent period, but from the current financial year, it has started gaining some buying traction. So on technical chart, basically the counter has been forming a rounding bottom formation, for which the immediate resistance was near to 175, where it is placed as of now. So from here onwards, we can expect, because today we have seen some kind of increase from the normal trading volumes. So we can expect that from here onwards, the follow-up buying can be seen in this counter. The first or immediate resistance that we can witness from here onwards will be 200, 195 to 200 zone. So one should definitely keep this counter in their radar. Even if there will be some kind of cool off, then 165 to 170 will be a very decent levels for this counter to accumulate for the upside target of 195.
All right, moving on. Vamakshi, you have a couple of stocks that you have kept on your radar. That is RHI Magnesita, even Vesuvius and IFGL Refractories. Why are all of these counters in focus?
Well, sir, all these counters are buzzing in trade today after it is reported that the center is looking to include refractories in the upcoming production-linked incentive, that is the PLI scheme 2.0 for the steel industry, as it is looking to double the country's production capacity for the metal to almost 300 million tons by 2030. The Ministry of Steel is reportedly in talks with the refractory industry to develop an incentive policy to boost the domestic production as well as reduce the country's dependence on imports from China. Now, players like Vesuvius, RHI Magnesita as well as IFGL Refractories are some of the largest players as far as refractories are concerned, and definitely would be beneficiaries of the same. So on the back of this news flow, we do have RHI Magnesita as well as IFGL Refractories trading in the green, but unfortunately Vesuvius is declining in trade.
And out on all those stocks as well. But with that, thank you so much, Vamakshi, Osho, as well as Lisa for joining in with us. That was the last stock for today, as well as Kunal for joining in with us as well. But as we wind down this edition of the show, India's internal economy is set to reach about $1 trillion by 2030. That's the word that is coming in from Bain & Company's Parijat Ghosh, and he also remains quite confident about India's digital economy. He adds that the startups, MSMEs will have a major role to play in this as well. Let's go across and listen in.
So we are very confident about the fact that we do expect it to become a $1 trillion economy, a digital economy by 2030. I think there are a few fundamental drivers to this. One is absolutely the digital infrastructure that has been built up in terms of the India stack, and how both public and private companies are now leveraging this to meet consumer aspirations, and in both metro tier 1 but also deeper in different geographies. I think the second aspect from a background and a driver perspective is just the change in the income distribution in households that we see over this time horizon, and the fact that one in two households will now be a part of either the middle or the upper middle income cohorts in the country. So those are really two important aspects. Of course, in terms of unlocking the opportunity, we believe that startups, established corporates as well as MSMEs will have a role to play in unlocking this opportunity. We think all of them will be engines of growth. Apart from the fact that there's the digital infrastructure and the capital, I think two other aspects that we think are core to this is how do companies really solve for the evolving needs of the digital consumer of the future, and there are a few facets of that we've elaborated upon in the report. And the second aspect is how companies change their wiring, their operating models to not only tap into newer markets, but also actually become more efficient, become more productive themselves.